Hello, everyone. My guest today is James Isilay. He's the CEO and founder of Cognism, a B2B SaaS company which was recently voted one of the top 25 startups in the UK by LinkedIn. Before founding Cognism, James was employed as an algorithmic trader. James has a Master's of Engineering and Information Systems Engineering from Imperial College of London. James, you ready to take us to the top?
Yes, for
All
sure.
right.
Thank you. Thanks for inviting me to the show.
You bet. Algorithmic trading. So did you get like super rich, carving milliseconds off of trades by installing hardware close to the stock exchange?
Not quite. I was at a Swiss utility when I was doing the algorithmic trading. So I was doing kind of a bit more slower stuff. But it was good fun. Initially I thought it was my dream career, but then I realized that it wasn't. It was sitting behind a desk all day
Mm-hmm.
long, which I'm a bit more of a social person, so it wasn't for me really.
So what is Cognism?
So Cognism, we help businesses find and engage new business in the B2B space. So we're providing global contact data, so mobiles, direct dials, B2B emails, and then the tools to engage that data to create new business. And we've also just recently acquired a business in Germany called Mailtastic, which is a email signature marketing platform, and that really ties back to getting those prospects engaged to help increase conversions.
When I hear about an acquisition like that and the space you're in, what I really hear is it's a data play. It allows you to make sure
Yeah.
you have enriched contact data, etc.
Exactly, yeah. So that's part of it. Part of when we're looking at acquisitions, what we're also looking for are tools that help us to inform our data asset and to improve our data quality.
Mm-hmm. And that acquisition was done back, I believe, on May 11th of this year, so fairly
Yeah,
recently. How did you
right.
meet the founders? Tell me how the acquisition went down.
Yeah, but pretty much everything was done because it was COVID, and then we had all the country lockdowns as well. So it was a really interesting time to do an acquisition. We'd met them just before the country lockdowns had happened, so we were able to travel and meet them once. But then everything was done over Zoom, and so we did all of it over Zoom. And it's funny because in Germany, you have to actually go to the notary and actually have the whole contract spoken out. Even you meant to actually have a representative to sit there and listen to the entire contract spoken out, but they made an exception because of COVID,
Oh,
so we were able to
wow.
do everything remotely. Yeah, it was it was
That's
it was
incredible. Okay, so that closed earlier this year. Give me a general sense. What did you guys pay for Mailtastic?
In total, I believe like in total it was around about 4 million. I think it was about
Okay.
4 million.
And how do you structure that? I mean, you obviously have some scale, but you don't have hundreds of millions to throw around. Was it an all stock deal, all cash? Was there an earnout? How do you
It was
structure
a
it?
it was a mix of stock and a mix of cash.
Okay, got it. And how do you, as a startup founder, sell the Mailtastic founders on taking your stock instead of more cash? You have to sell a vision to them, get them to believe in your vision.
And we've had an incredibly fast growth rate. So we grew in 2019 from like 2 to 7 million. So we've got an amazing revenue engine. I mean that's the heart of our company really is an incredible inside sales engine and great marketing engine as well. And so we could sell them the fact that they would grow faster with us. I think in Europe in particular, there's a lot of great product companies that have don't have the capital to grow and have like generally weak, don't have the investment in the sales team, and also in their home markets, it's usually a little bit tougher than say in the UK or US markets, both of which we have access to.
hmm So just to be clear, you finished 2019 with a run rate of 2 million, and you've just recently passed a $7 million run rate.
But we've just yeah, that was at the end of 2019. We were 7 million, and now we've just gone over 10 million.
That's great. Okay, so I got my math wrong then. You finished 2018 with 2 million, 2019
Yeah,
with 7 million, and now you're passing 10 million, 830 grand a month.
yeah. So this month we did about 750K of net new business. So we're kind of
750.
getting back. Yeah, so we're getting back to net kind of just well, where we were pre-COVID. We had a little bit of a hit, with everything that happened with COVID for 1 month, but we've consistently grown and consistently hit our targets every month.
hmm Walk me through what happened in COVID again. 2018, you're 2 million. 2019, you hit $7 million run rate. December, that's call it 8, 9, 10 months ago. COVID then sort of hits. You've only added about 2 million over the past 10 months. What impact did COVID have on that growth?
Well, I suppose yeah, we're kind of at 3 million, right? I guess the what really happened, churn. I guess like customers that we had that we're in the recruitment and the event space in particular got really heavily hit. I think in particular in the UK now, those types of we've had a complete lockdown, and then we've gone back just recently in the last couple of weeks into lockdown. Those businesses are heavily hit. So I suppose like when we had started in 2017, we had a focus on SMB businesses. So of course SMB businesses have been we've been moving up consistently, away from the smaller companies up to larger employee companies. But that was part of a large part of our customer base, and that customer base has been hit particularly hard as well. And a lot of that it's got like a portion of that is coming back, but that was the main hit. And then it was also just the disruption of going from in office to work from home. And so we've made that transition now of actually being able to effectively manage a remote sales team. But initially, that was a bit of a shock to our system, of actually, because we had a great office culture and great team in office.
Yep. No, it's a tough thing to balance, obviously. The nice thing is you're still getting growth. And yeah, to your point, call it 2.5, 3 million in new ARR over the past, call it 10 or so months. You've raised capital, obviously, along the way. Tell us about that.
So yeah, we've raised in total about 23 million from a mix of European and US investors. So we still got a very healthy cash balance from that. But yeah, initially we had investors from mainland Europe, from Switzerland, and from actually from the Balkans, like a fund from the Balkan fund, and then we got funded by UK investors, angel investors, and then more recently from a big US VC called Peakspan, and then from AXA Investment Partners, which are also European based.
So break that down for me. You did 10 million with Peakspan in July of 2019. Is that right?
Yeah.
And then 12 million from AXA just in March this year?
Yeah, and that was a mix of like primary and secondaries, yeah.
Tell me, some folks don't understand what secondary means. How's that work?
So basically it's existing employees or existing investors selling their shares, for a small discount to an investor. So it's a great way to get liquidity, and it's becoming a bit more common. So if you want liquidity at an earlier stage, that's actually becoming an option now, whereas that, from my understanding, it wasn't much of an option even just a few years ago, but now it's funds are getting more used to offering it.
And why would folks on your team do that if they know your financials and see you're growing so fast, especially considering the tax consequences of cashing out a portion of their shares?
Yeah, I mean, speaking to some of my angel investors, especially from the UK, a lot of their angel investments have just died, and so actually getting any sort of money out from an investment is great, So they're ecstatic just to actually see any sort of return from a seed stage investment. I think just generally, everybody in the team is pretty much a first time in startups. Like none of us are experienced entrepreneurs, and so just getting some liquidity to get a lifestyle balance, was a great opportunity to, I suppose like get a bit of cash and buy some of the things that you wanted in life, right?
Yeah. About what portion of the 12 million ended up going to secondary?
Totally, it was about 5 million.
Oh, okay. So not was that 30, 40%, something like that?
Yeah.
Yep. Okay. Not bad. And the rest of that, obviously, just sort of infusing the company. You mentioned healthy cash balance today. Buy yourself some runway during COVID. Obviously, it was probably a main priority. Help us understand what team looks like today. How many folks?
In total, we're 179 people, so it's a very large number. But we have a lot of people in the Balkans. So we have like a large data research team in Macedonia, and all our engineers are in Croatia, in a place called Zadar, and some are in Zagreb. And then our sales and marketing team are in the UK, and then we've got a small office in New York, and one person in Vancouver.
What's the total monthly expense for just the team in Macedonia, just so we get an idea?
In terms of expense, I mean, I would say it's not. I mean, typically, like we're paying about 500 euros per person there, into like an average for so that's kind of the average price. I'd have to
per month.
Exact. Yeah, per month. Yeah,
Yeah,
so
yeah.
it's very. I mean, when I looked at it, it was cheaper than having hires, say, in India.
Yep.
And they're on the same time zone. Like everybody's fluent in English. So it's a very cost effective location. And part of like our like I said, one of our first backers was a firm called SC Ventures, South Central Ventures, who are from that region, and part of it is creating jobs in that region. So it was a really great fit for us to take funding from them, and then also to build a base there. So it was a double bonus really.
And so, how many people now are on the team there?
I believe it's like in both regions, it's about 60.
Okay, about
Yeah.
60. Okay, great, great, great. And now, to help me understand this, so there's a Crunchbase says you guys have raised 50 million. That's obviously not accurate, or I'm missing something.
Yeah, I asked that to be corrected.
Yeah,
there's like a double count there. So I think
they've got the Series B counted like 20 times. Got it. Because then I was going to give you shit. I was going to say you've only built a $9 million company and you raised like 6x that. That's not really capital efficient, but you're much more capital efficient than what that shows.
Yeah. So I asked that to be corrected, but it hasn't. I'll chase them.
No worries. We got the right story here now. That's all that matters. So 60 people in those locations, 179 on the team total. And so how many engineers would you consider on the team?
We have like 15 coders and we have 24 with DevOps, which includes QA as well. Like 24 with DevOps and QA.
Okay, and how many folks in our team carry a quota?
I would say like carrying quota. I would say that's around about 12 right now.
And James, should I dig deeper here? At the top of the show, you said one of the things you feel like you're very good at is your sort of revenue motion. I mean, should I dig deeper on how you built the sales team?
Sure. Yeah.
So how'd you build it? Right. So let's just start with like a number and then work backwards. Right. What do you set quota at relative to their full on target earnings, base plus commission?
So in terms of the actual quota, I mean, right now, in terms of the actual BDMs, or what I guess you call account executives, they have like a minimum target of around about $8,000 of quota that they're meant to be bringing in per month. That's and then in terms of commission, we're just about to change our commission model right now. It's I've been told it's very generous, and we kind of set targets. We've been setting targets so that generally like almost all of our reps always hit their targets. So we're quite generous on the targets, and we're getting a little bit tougher now on terms of targets. So but it's around 8,000 minimum that they need to hit.
So like last month, how many reps hit your quota?
All of them hit quota.
Okay, so that's obviously not good. You want to set a
little bit tougher.
Yeah. So and then you said your commission's generous. I mean, usually you hear something like 30% or something like that. What is your commission at right now?
Oh, it's 10. Okay, maybe we're not that generous.
10% of monthly or annual?
Of monthly, yeah.
Got it. So if a quota is hitting their 8,000 in new MRR target every month, they're basically adding $800 of a month to their comp, basically 10% of 8K.
Exactly, yeah.
Okay, got it. What were you going to say? It sounds like you were going to say something else there.
No. Yeah, that's
okay.
Right.
Got it. So commission's 10%. And how long? Here's a big question: how long do you pay that commission? Is it every month for 12 months or 24 months or what?
Yeah, it's every month for 12 months.
Okay, so if a customer stays longer than 12 months, your margin automatically increases because you don't have to pay commission anymore.
Exactly. Yeah.
Interesting. How long are customers staying?
I mean, generally, in terms of the total time that they're staying, that would be. I say like in general, it's around about 14 months. But we have customers that are staying a lot longer than that.
Maybe a better question is like, what's your monthly revenue churn?
So our net retention. Our net retention is around 85% right now, and it's moving towards 90%.
Oh, James, that's really poor. That's a very poor net retention metric. Why is that so low?
I think it's quite typical in our industry. I mean, because in the like for Meltastic, for instance, our net retention ratio is over 110%.
Well, that's great.
Yeah, but in prospecting tools, for like I suppose in the data business, like a net retention rate of around 85% is, to my understanding from the history of the industry, quite common. So we have a very fast sales cycle, and also we have returning, like a lot of those customers will, like customers that churn out will come back.
Mm-hmm.
So they treat the service as almost transactional, and so then they return. So it's as far as my understanding and knowledge of the industry is quite a common. That's like a common kind of
Well, I mean, we just
metric.
saw Zoom Info go public, right? They're obviously much larger, more mature, et cetera. They've been around for much longer. And, they're at like 120 in terms of net revenue retention, right? So you would put them in your space, right?
Yeah, I would put them in a space. I think that figure really applies to more the enterprise clients, and if you actually look at their SMB net retention or their mid market, then I think it's more towards our figure,
Yeah, yeah,
from
yeah.
my understanding.
Yeah, I mean, according to the S1, they basically broke it down by 3 cohorts. They also broke it down though by just as a on a revenue basis across the entire business, and it came out to call it like 110, 120. But look, you'll get there. I mean, that's why you go do an acquisition like Mailtastic. You'll do more of this, and it'll become stickier and stickier over time.
Sure, and
How
I think
many?
part of that is we started in that SMB space, right, and then we've moved up towards moving towards enterprise right now.
Yeah.
So that's part of the story.
How many customers are you currently serving?
In total over 1,000 if you include the Mailtastic clients.
Okay, got it. So I mean, so what are they paying on average per month then?
In total, like our ACV right now is about 14,000 per year.
Got it. So that means ARPU is called like 1,000, 1,100 range, something like that. Yeah, interesting. Yeah. Okay, got it. And do you think you'll break a $10 million run rate by the end of the year? You got 3 more months.
Oh no, so we've already gone over 10 million. So we're over 10 million now.
Oh, got it.
And we should finish this year at 11.5, and then next year, I'm certain with the kind of metrics that we've got that we'll be at 20 at the end of next year.
Interesting. That kind of confidence to me goes, oh, he's putting a deck together. He's about to go raise more capital.
Well, yeah, we always have like a deck ready. But I'm just quite solid on our metrics, and then the other thing is that we're aiming to increase our ACV. It was at 11k, now it's at 14k, and the aim is to get it towards the 28k. And we're releasing we know what we need to do in terms of product strategy to get there.
Yeah, no, it makes a lot of sense. And how much are you burning per month right now?
Actually, only right now at the moment it's only about 200k per month that we're burning.
That's net burn, right?
Yeah, that's net burn. Yeah,
that's actually not that bad. So I mean, that money that you raised, I mean, you've got call it 10 million basically. Well, 5 million of the 12 was secondary, so you've got what, 6 or 7 still sitting in the bank.
Yeah, exactly,
yeah,
exactly.
Interesting.
And so we're doing. I think COVID actually helped us get way more efficient. So we didn't need an office anymore. Like it slowed our kind of headcount growth. So there was a lot of positive effects, I say, from COVID and just making us more efficient in terms of how we worked. We really have an engine now where we can just put more money into headcount in terms of SDRs or into marketing and then get more growth. So it's just really a question of how much we want to put the foot down on the pedal at the moment.
Yeah, I won't push you harder than this sort of high level question because it's obviously sensitive information. But when you did do the $12 million round, did you guys break $100 million valuation, or do you think that'll be your next round?
I think that'll be our next round.
Got it. So you had to have been flirting with it though. You got to have been pretty close on the 12 million.
Fairly close, yeah.
Yeah. Very good. All right, James, let's wrap up here with the famous 5. Number 1, favorite business book.
The Hard Thing About Hard Things by Ben Horowitz.
Number 2, is there a CEO you're following or studying?
Yeah, of course, Henry Schuck from Zoom Info. Of course, I like they have an incredible revenue machine, and also just their path to IPO through organic and inorganic growth is something to be studied.
It's a heck of a story, and the use of debt when you look at the Zoom Info acquisition and how they pulled that off. It was incredible.
Exactly.
Number 3, what's your favorite online tool for building your company besides your own?
I say Gong. I like Gong. I also Slack, actually. Gong and Slack.
Number 4, how many hours of sleep you get every night?
About 6.
Okay. And situation, James? Married, single, kids?
Yeah, married. Two girls, 13, 11, and one boy, 3 years old.
Oh, wow. And how old are you?
I'm 42.
42. Take us home. Last question. What do you wish your 20-year-old self knew?
Oh, new. I would say actually, doing a startup. Like actually taking more risk away from. I suppose like when I graduated, it was the path was to go into investment banking, which is what I did, and then I became a developer trader. I think if I would have taken more risk and actually jumped into startup world earlier, because I just love it. It's like it's just so much fun.
Guys, Cognism.com, a great prospecting tool. They've just passed $10 million in annual recurring revenue. We'll finish this year with $11.5 million with eyes on $21 million in 2021. They're serving over 1,000 customers. They raised $23 million to do it. Their last round of $12 million, $5 million of that was secondary, but the rest basically still sitting in the bank because they're just burning, call it $200,000 per month right now. Maybe do another round in 2021. We'll see what happens. Team of 179 people, big data team in Macedonia, and another team in Croatia of developers, 24 engineers total, 12 quota carrying sales reps, about to change the commission structure to get a little more aggressive there. $8,000 in new MRR per month is quota for those AEs as James continues to scale the company. James, thanks for taking us to the top.
Thank you.
One more thing before you go. We have a brand new show every Thursday at 1 p.m. Central. It's called Shark Tank for SaaS. We call it Deal or Bust. One founder comes on, 3 hungry buyers, they try and do a deal live, and the founder shares back-end dashboards, their expenses, their revenue, ARPU, CAC, LTV, you name it, they share it. And the buyers try and make a deal live. It is fun to watch every Thursday, 1 p.m. Central. Additionally, remember, these recorded founder interviews go live. We release them here on YouTube every day at 2 p.m. Central. To make sure you don't miss any of that, make sure you click the subscribe button below here on YouTube, the big red button, and then click the little bell notification to make sure you get notifications when we do go live. I wouldn't want you to miss breaking news in the SaaS world, whether it's an acquisition, a big fundraise, a big sale, a big profitability statement, or something else. I don't want you to miss it. Additionally, if you want to take this conversation deeper and further, we have by far the largest private Slack community for B2B SaaS founders. You want to get in there. We've probably talked about your tool if you're running a company or your firm if you're investing. You can go in there and quickly search and see what people are saying. Sign up for that at nathanlatka.com/Slack. In the meantime, I'm hanging out with you here on YouTube. I'll be in the comments for the next 30 minutes. Feel free to let me know what you thought about this episode. And if you enjoyed it, click the thumbs up. We get a lot of haters that are mad at how aggressive I am on these shows, but I do it so that we can all learn. We have to counter those people. We got to push them away. Click the thumbs up below to counter them and know that I appreciate your guys' support. All right, I'll be in the comments. See ya.